Good morning, everybody. Paul here coming at you with a Crypto Coffee update where we cover all of the news, events, and happenings in the exciting world of decentralized finance, colloquially known as crypto. And of course, for the namesake of the series, join me for a delicious simultaneous sip of coffee. Cheers. Wonderful. All right, we are here at Cryptide.cc, our website where you can get all kinds of information about not only the news we cover here, but even more. So check us out. All right, so for the mainstay of this series, let's jump in. Facebook has officially confirmed it is indeed building a stable coin on a blockchain. So people, of course, are exuberant about this. Some are calling it the key to mass adoption, but given the fact that Facebook, while a very popular entity, pales in comparison in terms of overall deployable capital and impact in society, arguably, when compared to JP Morgan, an entity already using a blockchain-based stablecoin, I'm not sure if this is actually the key per se. But no matter what, with that said, it definitely is a move in the right direction if that is indeed our trajectory. They're looking to raise about $1 billion for this endeavor. I find that figure really humorous considering EOS was able to raise $4 billion for their ICO. So Facebook, you might be undervaluing yourself a little bit, but given the fact that it is indeed just a simple stablecoin, as you can see here by perusing the article, there it is, building a stablecoin. Perhaps it won't be as complicated as an architecture as EOS. Hopefully at least not as convoluted. And you can see here it's expected to launch in the first half of 2019. So we can see this assumingly by the time July runs to a close. So that is exciting. We'll see what happens with Facebook and their blockchain and keep you up to date as we move forward. One thing's for certain, Facebook is driving this blockchain forward, but when it comes down to who actually owns Bitcoin, it seems as though it's definitely 18 to 34-year-olds, at least in terms of proportion of the population. 20% already own Bitcoin, at least in the United States, according to a study that came out of Blockchain Capital recently, and this is despite the bear market. So while millennials and younger folk have been flooding away from Facebook, which is now looking towards crypto, they are well aware of Bitcoin and already have familiarized themselves with the technology. So this could potentially be a bridging of generations, allowing some of the older individuals who now majoritively inhabit Facebook as a means of connecting with old friends, classmates, colleagues, and just individuals they've known throughout their lives to become more familiar with the more ubiquitous coin, Bitcoin. Unpacking this a little bit more, not only do they own the most Bitcoin, or proportionally, of course, in terms of overall holdings, that would be large financial institutions, assumingly, and the ever-elusive Satoshi Nakamoto, who we get to talk about a bit later in this episode, but they have the highest rate of awareness, so 90% of them age 65 plus, 18 to 34 have a 90% plus awareness of Bitcoin, meaning 9 out of 10 times you ask somebody in this age range, yeah, they've heard of it, and it can at least tell you what it is. They don't think it's a Pokemon, at least. Whereas the lowest is 88%, which is only a 2% decrease for 65-year-olds plus. So that's still amazing. 88 out of 100, 65 plus can tell you at least what Bitcoin, maybe not is, definitely not, assumingly from a technical standpoint, but at least maybe what function it serves. Maybe it's an internet money. Who knows what depth of information this age range has, but it's amazing to see. And 60% of 18 to 34-year-olds claim that they are at least somewhat familiar with Bitcoin. So, 90% have heard of it, but 60% total are somewhat familiar. So that's really astounding to see, especially given just 3 years ago, these numbers were far lower. In some previous Crypto Coffee updates, even throughout the the bull run-up of 2017, these numbers were startlingly low. So definitely the 2017-2018 bull and the subsequent bear did much to instill the idea and at least the semantic of Bitcoin in the minds of the people of the United States. So very interesting things. Oh, and by the way, most Americans think people will be using Bitcoin in the next decade. And more people are planning to buy it than ever before. So whether this is bullish or bearish, I will leave it up to you, my dear friends, to come to your own conclusions, but interesting nonetheless. As promised, we will talk about Satoshi Nakamoto, and apparently the man, the myth, the legend is back, but not in actuality, just in namesake. A miner controls 40%, which is a pretty penny of the Bitcoin hash rate. Many are expecting a 51% attack, but perhaps not. We'll explore that here in a moment. The big takeaway here is a unexpected turn of events in the hash rate of Bitcoin Cash. Heading over to Coincash Dance, you see 34% in the last 7 days has been mined by this mysterious other mining pool. And generally, while a small sliver of this may well be other pools that aren't the Satoshi Nakamoto pool, the vast majority of this gray area is indeed a single miner or collection of miners. So people are wondering, is this a 51% attack in the making? What's going on? And some speculate that, indeed, due to some recent delistings, much of the Bitcoin SV hash rate has been turned back over to Bitcoin Cash proper. So, while that's one possibility, there's really no clear answer, since one of the beautiful variables in a proof of work system is it's near impossible to ascertain exactly where these miners are and who owns them. While theoretically possible, just simple prohibitions against identifying one's personal identity or geography make that a bit more, well, far more difficult to pin down. So very amazing stuff. One thing I find interesting every time I come over to Cash Coin Dance, it is currently 550 times more expensive to transact on the Bitcoin network. Bitcoin fees are now about 40 cents per byte, which is quite expensive, whereas Bitcoin Cashes are extremely low. There's been a debate kind of coming back into the fray now that the bear market has taken its toll on a lot of folk, and we're seeing more objectively minded, thankfully, conversations around block size. Now, while I don't believe we need 55 terabyte blocks, as some boisterous individuals on the SV side claim, I do believe that 1 megabyte is perhaps a bit prohibitively small. Then again, there are technical implications here at work that I'm not necessarily qualified to break down, but it seems that the tide is indeed shifting, and this is a question that is entering back into the minds of the Bitcoin community as a whole. So I'm curious what you guys think, not only about this mysterious Satoshi Nakamoto miner, but also if you think that perhaps a reasonable increase in the block size, or none at all, is an appropriate response to these painful fees. One thing's for sure, Lightning Network is shaping up quite nicely, arguably, but it's taken, far longer than the original 18 months that they claimed, and it definitely will not be ready in time for the next bull run. These things certainly take time. So let me know what you think of that below in the comments. Moving on, Washington State joins the fray. They've jumped in and have thrown down the gauntlet. They have defined distributed ledger technology. And just as a clarification, distributed ledger technology is not just blockchain. It also includes other types of distributed ledgers, such as directed acyclic graphs, such as in Byteball or IOTA. Very interesting things going on there. Suffice to say that they've just enshrined this into law, despite the fact that the legal association, I forget the name off the top of my head, one of the American legal associations took a step back after Caitlin Long and some other individuals vocally decried one of the blockchain laws that they were trying to pass to help to homogenize federally these laws. So it seems this is moving forward despite cries from other organizations saying not to pass these sorts of things. So not too much information per se as to the deep implications, but if you'd like to peruse the article, as usual, everything below in the description. We're just checking off another state on the list of governments that have indeed formally recognized that this technology exists and is not going away anytime soon. All right, next article. This is a really important one, guys, so heads up here. If you're a long-term holder, one thing to keep in mind is you want to keep your stuff safe. So hardware wallets are a great tool. However, you do not want to have those compromised if it is indeed where you're keeping the majority or at least a significant portion of your funds. And unfortunately, there have been some phishing attempts going around. It looks legit. Ledger Live Wallet. Hey, restore your Ledger Live Wallet by entering your passphrase. It turns out that's not legit at all. Ledger will never ask you for this. It's not how it's supposed to go down. You actually enter that on a new device after deactivating the old one. There's an entire process for that. And if you have any questions whatsoever for Ledger, you can reach out to them to get them to help you through the process of recovering your hardware wallet if you ever need to do so. So definitely security, scrutiny, and safety are the main focuses here, and any kind of attempt to get you to reveal information that then in turn can allow whoever receives that information access to your funds is dangerous. This includes any emails from exchanges, any warnings such as this, etc. So definitely stay safe out there, guys. I'd say do your due diligence, but these kind of things sometimes pop up at random, so taking it slow slow. I know it's easy to get complacent at times, but seriously, taking it slow is really a great way, and reaching out for assistance if need be is definitely something that has zero shame. If we want to go fast, go alone, but if you want to go far, we go together. So, all right, great stuff. Speaking of exchanges, Kraken, and as speaking of Bitcoin SV previously, Kraken has pulled the plug and the price continues to decline. This is part of the reason the speculation of the mysterious Satoshi Nakamoto miner. Their identity may indeed be some of the Bitcoin SV miners, since without a place to sell their coins for profit to continue to keep the lights on, it's a difficult situation for the SV side. After all, miners cost electricity, and electricity costs money, and if you're trying to create money, Bitcoin SV, no one values it, well, you're really just kind of burning capital. And that's unfortunately seems to be what's happening. Well, unfortunately or not, that's really just economics. And Calvin Air can only stomach assumingly so much economic burn rate. So there's a lot of speculation going around, but one thing stands for sure. Kraken has indeed pulled the plug on Bitcoin SV. And they're not the only ones. So this is interesting to see. Binance has as well pulled the plug, and only time will tell if this will be the death knell for the alleged Satoshi's true vision version of Bitcoin. Bitcoin Part 2, Bitcoin Cash Part 2, Electric Boogaloo. How many series can we have on this? And let's go ahead and unpack some more things about the claimed Satoshi Nakamoto, Craig Wright. Things are not looking good for his claims at all. An eagle-eyed Redditor has stated or spotted something a bit strange in one of the documents submitted by Craig Wright in an effort to prove that he is indeed Satoshi Nakamoto. There's a very strange typo. It seems as though the individual who he was corresponding with, David Kleiman, allegedly misspelled his own last name in his email address. That's very weird. Some individuals, including the individual who spotted it, uContrarian, over on Reddit, has pointed out that this is perhaps a sign that indeed this is not legitimate at all. This is really a forged version of the document dating back to 2014 that Craig has forged in order to make it seem as though he indeed is not only Satoshi Nakamoto, but the individual in question for this specific court case. If proven wrong, then Craig Wright could well owe the family of David Kleiman. Unfortunately, he is now deceased. He may well owe this family a million Bitcoin, which stands in a tall order of over $10 billion. Now, one thing that really is the misstep is apparently this was submitted via a PDF. Now, he had the option to fax it over, but assumingly just for the sake of expediency, sent it over via PDF. And it seems as though this document, its PGP keys, I believe is what they said they used, backdates this all the way to 2014, but not as far back as Craig Wright is claiming. So there's a lot up in the air here. I am not legally qualified to make any crack at this whatsoever, but suffice to say, there is 1 million Bitcoins at play, a huge, mind-spinning sum of capital. And if, assumingly, Craig Wright does have access to these Bitcoins, then indeed he could unfortunately be taking a big hit to his net worth. One has to wonder why Dave Kleiman would misspell his own last name, but stranger things have happened. Not that I am personally convinced in any regard that Craig is indeed Satoshi Nakamoto. One conversation I was having with a dear friend of mine, he raised such a great point. He said, imagine going through painstaking processes of trying to obfuscate your identity and stay anonymous, going in so far as to disappear one day out of the blue and never to return. And then, almost 10 years later, pop your head up and get really upset when people don't believe that you're Satoshi Nakamoto. It doesn't make much sense. It's kind of like parking your car in a garage and painstakingly laying red brick by brick to ensure that you'll never get that car out again, and then get really upset when you can't get the car out. Doesn't make much sense to me, but let me know what you think about this as well. I think the general sentiment, though, is Craig is perhaps not Satoshi. All right, now moving on to everyone's favorite subject. My last Crypto Coffee update that I did, I covered this, and I had a bit of a cynical spin on it. I was really thinking, should I re-record that, or should I just keep this as is? And I just kept it as is, because honestly, as said, I've been pounding Tether's story like a bongo on a street corner, guys, and everyone's hearing and turning heads, but like, what's that guy about? Well, it turns out that it's mostly legitimate. Now, whether or not this proves insolvency in and of itself is still up in the air and up for debate. Some individuals are saying that fractional reserving is something that realistically could benefit the crypto ecosystem, and I have no qualms with that per se. I'd love to open up the dialogue for that, but nonetheless, when you say that you're one-to-one backed by something, and then you change the story to say, oh, well, I'm actually backed by assets and other collateralized obligations, it's okay. And then it turns out you were only 74% backed by cash and cash equivalents. It's not a good look. And ultimately, this is something that has occurred with Tether. So they are short on the amount of cash they should have had, and cash equivalents as well, to back up their Tethers, which means if 100% of people wanted to redeem their Tether, there wouldn't be enough to go around. For every dollar, you get 74 cents. Now, I don't believe that people are going to run on Tether that voraciously. It doesn't seem to be the case at all. And that's generally what these financial institutions account on in order to keep the fractional reserve system continuing in perpetuity. And this ultimately becomes a problem when there are things such as bank runs, or there's not enough liquidity in the coffers to pay back the individuals who would like their capital back, as well as to continue day-to-day operations. Generally, these kind of things are very, very systematically controlled to ensure that accounts receivable, for example, are coming in at a really specific time when accounts payable are going out. So there's many processes that occur in formalized financial institutions. But as we've covered, like I said, ad nauseum, it seems like in previous videos, this has not been the case with Tether at all, at least from the outside perspective. We can't kind of peek into that black box since it's so tightly locked, but jumping from bank to bank to bank, having funds seized unexpectedly due to unscrupulous activity, one could say, is not only not a good look, but definitely does not provide the level of consistency one would assume a large billion-dollar entity would need to ensure that, well, fractional reserve runs without a hitch. But with that said, it does indeed seem that there's only $74 per 100 dollars worth of USDT issued. So at least for the time being, let me know what you think of this. I'm like I said, I've covered this so much, sometimes I feel like I'm like, what does this even look like at this point? I get cross-eyed, I've seen it so much. But continuing that narrative, USAG, the entity we've talked about previously, actually that was NYAG, so this is an even larger this is the US Attorney General, so federal level. They've charged two individuals providing shadow banking services to crypto exchanges, including Bitfinex. Now, for those of you who aren't familiar, shadow banking is essentially the facilitation of just simple banking services, deposits, withdrawals, moving money around, but they are not federally licensed to do so, and ultimately that is tendentially associated with more unscrupulous activity such as drug trafficking, criminal activity, etc. Not to say that that's explicitly what Tether is engaging in, as well as Bitfinex, but nonetheless, it's not legal and not a good look at all for a multi-billion-dollar entity. And this is coming out of the Block Crypto. Big shout out to Larry Cermak for first breaking this story. Really awesome stuff. And Bitfinex as well noticed something with his eagle eyes. He's a individual who's really been taking the maximum amount of flack. I mean, I say I've covered this ad nauseum. This guy has been a pariah in the community for suggesting this from the beginning. And by and large, it must be a wonderful, wonderful week for vindication for this guy. He noticed that in private conversations, one individual representing Bitfinex said Bitcoin can tank below 1K if we don't act quickly, explicitly in reference to Tether. And now this is very worrisome. Perhaps this was at a time, and it says this was in 2018, when, it says here, you know, the 10/15, I'm United States, so we switched that around, October 15th, 2018. This was at a time when the markets were looking pretty sickly, so perhaps this individual believes that indeed Tether's propping up the Bitcoin price. Really, it could go either way. We've seen statistical analysis that shows that there is indeed correlation between the Bitcoin and Tether, the Bitcoin price and Tether issuances, but there's also been longer-term statistical analysis that say the exact opposite. So really not sure whether to believe if there's correlation, and even if there is correlation, doesn't always equal causation, but at least this individual specifically referenced in the court case believes there is smoke and indeed fire when it comes to Tether issuances and the Bitcoin price. Now, going back to the ubiquitous nature now of Bitcoin, one has to wonder if Tether was kind of a initial jolt of kerosene to get this thing moving, and now that it's rolling, everything should be relatively stable, quote unquote, if stable means anything in crypto, with Bitcoin adoption and price. But nonetheless, worrisome precedent to say the least. Here is, again, that was the actual status from Bitfinex, and an article was written about it coming out of Crypto Insider. So just wanted to give you guys a more robust article so you can check that out. But really it just kind of talks about what we talked about here, along with some of the other notes from the document. So really interesting stuff. That's all we have for today, though, guys. I'm really curious what you think about this information on Tether, on Craig, and on this return of Satoshi Nakamoto, the mysterious Bitcoin Cash miner who now controls at present roughly between 30 and 35% of the Bitcoin Cash hash rate. So with that said, much love, guys. Thanks so much for joining me today. We are Cryptide. My name is Paul, and remember, the tide is rising, as is potentially Satoshi's mining capacity on Bitcoin Cash.